Welcome back, and we'll begin with commodity issues. And in Zambia, the president, Edgar Lungu, has called for an out-of-court settlement with First Quantum Minerals, which is being sued for $1.4 billion by a state-owned firm. First Quantum asked a Zambian court in February to dismiss the suit from Zambia Consolidated Copper Mines Investment Holdings, which is 77% state-owned and holds minority stakes in most of the country's copper mines. Zambia is Africa's second-largest copper producer, and differences with mining companies over taxes, electricity prices, environmental concerns, and labor matters often arise. The $1.4 billion claim by Zambia Consolidated Copper Mines Investment Holdings includes $228 million in interest on $2.3 billion of loans that it said First Quantum wrongly borrowed from the Kansanshi copper mine, as well as 20% of the principal amount, or about $570 million. And oil prices rose today, with global benchmark Brent crude trading comfortably above $50 a barrel. What's driving the prices this time? Let's talk to Desola Sumoni, research analyst at Financial Derivatives Company. Good afternoon, Desola. Thank you very much for joining us. We have seen oil prices dip below $50 per barrel for 3 consecutive sessions, but has recovered to $50 per barrel. What is responsible for this, Desola?
Okay, like you know, the mass we saw in the global oil market last week and late last week and early this week was driven by sharply rising U.S. production, very near record highs U.S. crude stockpiles, and doubts over the efficacy of the OPEC production deal to rebalance the market. However, we are seeing a rapid rebalancing as data from the Energy Information Administration and American Petroleum Institute both show that U.S. crude stockpiles declined sharply by 5.2 million barrels and 5.8 million barrels respectively. This was against the analyst projection of a decline of 1.8 million barrels. Also, Saudi Arabia, the largest oil producer, has cut its exports to Asia in April and has also signaled intentions to cut further in May and in June. Finally, data from the Energy Information Administration showed that U.S. production increased by, although it increased by 21,000 barrels to about 9.3 million barrels per day, the rate of increase in U.S. production is declining. So these factors put together are positive for the oil market, and that's what's causing the bullish run we are seeing.
Now, given the recent developments in the global oil market, do you still think that OPEC will extend the production agreement for another 6 months and beyond?
Yes, in my view, I think that OPEC is facing a prisoner's dilemma scenario where the organization has to choose between stopping the production deal in June to boost so that each members can boost their production and to regain market share, or to cut to extend the agreement and or further cut so that prices will increase and the members can enjoy the revenues. But in my view, the consensus is that the OPEC would extend the production deal in July and even beyond 2017.
Now, in the event that oil prices remain below $50 per barrel for long, how will it affect Nigeria, considering the budget benchmark at $44 per barrel?
I think that the global oil prices is of immense importance to Nigeria, because if you look at the budgets, the medium-term expenditure framework, the economic recovery and growth plan, all of them are hinged on oil price of above $42 per barrel. So in the event that the oil prices decline below that level and stays at that level, it will be a serious challenge for Nigeria, because we will now see a revenue shortfall, we will see a rise in our budget deficit. Also, this it might also constrain the ability of the central bank to continue to intervene in the foreign exchange markets. This may cause the naira to depreciate again, and it's going to be disastrous for Nigeria.
All right, thank you very much, Desola. for your time. Do have a good day. Desola Simoni, research analyst with Financial Derivatives Company here in Lagos. In Egypt, the annual urban consumer price inflation hit a 3-decade high in April, adding pressure on the government to lower prices before the holy month of Ramadan begins at the end of May. The cost of living has reached a record rate in Egypt, hitting a 30-year high in April.
Annual urban inflation rose in April to 31.5% from 30.9% in March, the highest since June 1986, when it reached 35.1%. For many Egyptians, buying meat and poultry comes at a prohibitive price, forcing many to live on a vegetarian diet.
احنا عايشين دلوقتي على الفول والطعمية وفي نفس الوقت برضه غالي اسعار مرتفعة. يعني كنا بنجيب الفول ابو جنيه كان بيكفي يفطر العيال. دلوقتي عشان اجي افطر العيال جنيه كان بيكفي يفطر العيال. دلوقتي عشان اجي افطر العيال افطر البيت ب 2 جنيه و3 جنيه.
The annual urban consumer price inflation has put increased pressure on the government to lower prices before the holy month of Ramadan begins at the end of May. Food demand usually grows during Ramadan because of heavy consumption following the dawn to sunset fast.
Of course, after the prices went up, we were affected. Businesses became slower because some prices went up by 100%, others by 70%. People have a set budget to buy fish or meat, but because things became more expensive, they now have to buy less. Instead of buying 5, they buy 3 or 2 kilos. That's what everyone does now, and this means I am selling less. Instead of selling 100 kilos, now I sell 70 or 60.
Import-dependent Egypt abandoned its currency peg to the US dollar on November the 3rd, and since then the currency has depreciated roughly by half, causing prices of goods to soar.
There are many classes whose living standards have gotten worse, and I don't know how they are coping. There used to be commodities that were suitable for poor people, like beans and lentils. Now everything is equal in how expensive it is. If a poor family wants to cook a meal, they spend not less than £100.
Egypt's central bank raised interest rates to 3% when it floated the pound in November in an effort to fight price pressure. But inflation is expected to keep rising as the government pushes on with more economic reforms. The Central Bank's Monetary Policy Committee is due to meet on May 21st to discuss interest rates.
And finally, in Ghana, higher transport costs helped drive Ghana's annual inflation rate higher to 13% in April from 12.8% the previous month. The government of President Nana Akufo-Addo wants to slow inflation to 11.2% by the end of the year as part of its drive to restore macroeconomic stability under a 3-year aid deal with the International Monetary Fund. And that's it on the program. Thank you very much for watching. I'm Chimizi Obi Iwawu.